Tuesday, March 19th, 2019, Maneco 64, home of alternative economics and contrarian views. Before I go further today, I'd just like to tell you, some of you have asked me about a sweatshirt that I had in the Teespring store, and it wasn't there anymore, so I've redesigned it. So it's called Socialism is Throttling the Country. It's a political cartoon from over 100 years ago in the UK. So I've relisted that if you're interested, and for the people who ask me about it. Of course, over there you can also find End of Fed mugs, Billy mugs, and other merchandise. So this morning, I actually want to talk about, in a cashless society that we're going towards, gold will be even more precious. And I have thought about that myself. But today I'm going to talk about how one of the world's uber globalist economists is saying the same thing. Before I go into that, of course, I'll have a quick look at what the markets are doing. I'm a little earlier this morning. It's 7:03 a.m. London time. Yesterday, the stock markets opened quite strongly, faltered early on in the day, just before midday. We're in negative territory, most of them. And then they rebounded towards the close. The Dow finished up 65, S&P finished up 10, and the NASDAQ 100 composite finished up 26. So right now, markets are holding. The long-term picture still looks like a top weekly and monthly charts, but in the short term, they look fairly positive. So right now, as I speak, gold is at 1305.75, so that's up 2 1/4. The high overnight has been 1309 and the low 1302.20. Yesterday, I think the high was around 1306. Then we drifted off towards the close towards 1302. The monthly technicals still looking a little negative, but the weekly chart is looking better in gold. It looks like 2 weeks ago we made a bottom and we're now making higher highs. We'll have to see. Silver right now is up 2 cents at 15.36. The range has been 15.32 to 15.41. So precious metals still being contained by the banking cartel, the bullion banks, whatever. So the Dow is up another 46 this morning. We're at 25,962. So up just under 0.2%. S&P is up 4 at 2836.70. NASDAQ 100 futures up 10. Currencies, they're fairly steady. The pound's stronger here, 132.72, up about 0.1%. Euro likewise up 0.1% at 113.50. Dollars down 0.1 against the Japanese yen, 111.29, and the Chinese yuan is unchanged at 672. Crude oil continues to trade higher. We've got WTI almost up to 60 now. We're at 59.35. The Brent crude 67.50, up about 10 cents. So. And the bond market, the 10-year yield, 260. So it's still fairly low despite the rising stock market. It's pretty much near the low of the year, which is around 259. The 6-month to 7-year spread, which measures the yield curve, is minus 1.5 basis points. So the curve's still inverted. Of course, today and tomorrow, the FOMC will meet. Tomorrow will be the key day because they come out with the announcement press conference. So things could change a lot. We need to see what the Fed comes out with. I saw yesterday there's a story, a comment by Bill Dudley, who used to be president of the New York Fed. I think he's left now, but he said that the Fed could start raising rates again after the middle of the year. He thinks the economy is going to pick up and inflation could pick up as well. I think he's living in a kind of alternative reality, I think, that guy. But we'll have to see anyway. They like to talk a lot, these guys. They can't really do... That's what the Fed is, central banks have become. They've become propaganda institutes, really propaganda machinery. It's got nothing to do with markets and economics anymore. It's just managing perception. So, yeah, I was looking through the World Gold Council website because I was trying to find anything from like those kinds of places and the BIS on this March 29th date that I keep hearing that gold is going to be officially made a tier 1 asset, even though it's been talked for years that's the case. I haven't found in the BIS website anything about it. I didn't find anything about it in the World Gold Council website, which is basically gold.org. But I found a really interesting story by Ken Rogoff. He's a PhD economist, professor from Harvard University. And before I go further, Kenneth Rogoff, he is the uber globalist. He's the kind of guy who goes to the World Economic Forum in Davos. He's a member of the Council on Foreign Relations, or I'm not sure if he still is, but it says 2004. He's on the Economic Advisory Panel of the Federal Reserve. He's a member of the National Academy of Sciences. He's a member of the Group of 30 in 2008. And he's worked for his career, he was an economist at the IMF and at the Board of Governors of the Federal Reserve System. And as I said, he has a BA from Yale and a PhD from MIT. So he's the kind of economist who thinks that doesn't believe in free markets, small government, sound money, doesn't believe in the fact that we shouldn't have central banks, especially in the U.S. or anywhere for that matter. He's a neo-Keynesian, I would say. But yeah, there's an interesting article here, and it's from February, and I didn't see it before. Maybe someone in the Alternative or Zero Hedge or somewhere would have printed that out, but I didn't see it. And it says, Gold Investor, February 2019, The Curse of Cash and the Allure of Gold by Ken Rogoff. Ken Rogoff, of course, even wrote a book. It's called The Curse of Cash, published in 2016. So what's Ken Rogoff saying in this article? So let's see here. It says, The Curse of Cash and the Allure of Gold. In his book, The Curse of Cash, leading economist Ken Rogoff suggests that the excessive reliance on paper money is responsible for ills ranging from tax evasion to terrorism. He also believes that monetary policy would be more effective in a largely cashless society. And he says cryptocurrencies are not as effective replacement for paper money. He says, but gold's role is likely to increase as cash fades from view. Yeah, he's also calling for negative interest rates and all that malarkey. First, he says a history lesson. Let's see. Even as cash becomes a dwindling resource and regulation changes, the nature of cryptocurrencies, Rogoff believes that gold will retain and almost certainly increase its value. And I quote Ken Rogoff, if you look at the history of currency, gold has a unique role, and I don't think it's accidental. Some people say that if gold hadn't been selected as a currency thousands of years ago, it would not have a role today. I don't agree. Gold has a lot of useful qualities and unique features, so I think its status I don't think its status is in any way accidental. It's a monetary asset. There you go. Money. JP Morgan said that, didn't he? Gold is money, everything else is credit. It's a monetary asset, and I think if you replayed history another way, you would come out with gold again, he says. And I go on. As we have less and less paper currency, there will still be a need to store wealth, to have privacy, and to carry out transactions between parties who don't trust one another. Gold fills that role. There you go. Privacy, counterparty risk management. It's probably the best substitute for paper currency. So it's hard to imagine its transaction value won't go up over time. And there are all kinds of uses for gold in new technology that nobody even thought of years ago. So overall, it's hard to see gold's role diminishing. He adds, and it goes on to say, the article, in addition to gold being a store of wealth, Rogoff takes the view that it is a valuable long-term investment to both as a diversification and risk mitigation tool. What does he say here? Why more gold is needed? I'll go through here. And he's kind of focusing more on countries and what they call high net worth individuals. He's not talking to us or, the common person. But I think we can learn a lot from it. And that's what I've been trying to tell people, that you need gold to protect yourself. And silver as well. There's no talk of silver here, but we can add silver to this. So more gold needed. He is particularly concerned about the amount of gold held by emerging market central banks, suggesting they should increase their gold reserves by several percentage points. I quote him. It says, emerging market central banks should hold fewer dollars and more gold as a way of diversifying their portfolio. It is a simple question of diversification. At the moment, most emerging market central banks hold 1 to 2% of their reserves in gold, with 70 to 80% in dollars and the rest in euros and other currencies. I think a 5% allocation seems a natural position to take as part of an effective diversification policy, although it could be higher. After all, the US share of global economy is shrinking, power is being centralized, and we don't know what the future holds. This is really the key here, and I've been telling people about that, the deficits and the debt. And I quote him, we already have trillion-dollar deficits right now, and they're manageable. But if corporate, local, state, and federal debt is allowed to grow, there will come a point when the US gets stressed. And if deficits have doubled or tripled by then, inflation is bound to ensue. Our system is not built for high inflation, so it would cause incredible financial turmoil and stress. It may take decades, but these things always tend to blow up at some point. And as the US economy becomes proportionally smaller and the dollarization of the global economy becomes larger, the equilibrium becomes increasingly fragile. So he actually thinks that, the dollar is still going to be a reserve currency, but it's going to be a riskier reserve currency. So he ends, as a hedge, gold has enormous value. You never know what's going to happen. And when something really bad happens, gold is probably going to be worth a lot to you. So it makes sense for high net worth individuals and perhaps even some pension funds to hold a small percentage of their assets in gold. Looking ahead, Rogoff suggests that gold is likely to increase in value as its global role evolves. And I quote him at the end here. It says, I suspect gold's value will go up in real terms. I think the trend towards digital currencies will strengthen the value of gold as emerging markets expand and trust the US less. That will also strengthen the value of gold. So as part of a larger portfolio allocation, it seems very reasonable to me. So this is coming from the horse's mouth, the guy who hates cash. He likes gold. Is he telling the general public about it? No, he's talking to the World Gold Council about it. Believe me, I don't agree with his economic philosophy, but it just goes to show you, if the globalists have their way, it doesn't mean that gold will disappear from the scene. As you saw there, Ken Rogoff, the guy who hates cash, is saying that gold will be even more important to countries and to individuals as well. If you enjoyed the video, make sure you hit the like button. If you're not a subscriber yet and you're thinking of subscribing, hit the subscribe button. And for all of you who watch my videos regularly, make sure you also hit the little notification bell to be notified of my videos. You can also follow me on Twitter, Steemit, and DTube. I wish you all a great day. Take care. Bye.